PNC and Citizens Financial, two names to watch in the regional bank space. Why and how do these potential rules, how do they impact the broader regional bank space?
Right. We're going through the new rulemaking initiative right now, post the collapse of SVB in March. Right. We see after a collapse of financial institution, there's obviously a need for greater regulation. Silicon Valley, First Republic, these were $200 billion companies, but they slipped through some of the regulation that was needed. And what we're doing today is we're going down in size, in market cap, and in asset size. And these banks, the 100 billion and above is what you referenced. These banks are going to be subject to more regulation.
All right, let's talk about that 100 billion and above. We're talking, a lot about these money center banks. We're talking the JP Morgans, the Citibanks. How do these rules impact them? What changes could you possibly see to their balance sheets? And also, how do these rules, how do they impact potential M&A? We heard a lot about M&A after the collapse of some of these banks.
Right, the largest banks have been the most regulated forever, certainly post the financial crisis in 2008. Now, what we think is going to happen is some of the regional banks, the banks that are above 100 billion, they're going to be subject to more liquidity rules, capital rules. And what that has, the implication there is, they're going to be more dear in what they put on their balance sheet. They're not going to just put any asset on their balance sheet. So loan growth is going to slow. That'll have economic implications. Buybacks are certainly on hold. And to your point, M&A, because the reduced earnings power that these effects of regulation will have, M&A is certainly something that will be a consequence of this over the next couple of years.
So I want to go back to the regional banks for a minute. At times after the collapse of SVB, they traded on sentiment. We saw a lot of speculation with short selling. How do these proposed rules, how do they impact the broader sentiment when it comes to regional banks going forward, at least in the near term?
Right, we just need to know the rules. Investors and banks are pretty adaptive. After 2008, there's a lot of calls that the banks weren't going to be profitable again. Certainly, they made a lot of money and a lot of progress innovating over the last 15 years. What we're going to see that again today. But I think near term, there are pressures on earnings, there are pressures on returns. And so one of the things that I think investors and banks will do over the next several years, they will consolidate. There are 80 banks, Frank, between 10 and 40 billion in assets. And so as these banks need to build more scale beyond the 100 billion, this is one of the effects of regulation.
Yeah, we often talk about Goldilocks scenarios where you have to get just right. So are there any banks that are in that sweet spot? They're not too big, not too small, and these rules won't really impact them or possibly could help them?
Sure. We think the no man's land is really between 80 and 120 billion in assets. So when you become 80 billion, you get treated like you're 100. So you need to get scale beyond 100. One of our favorite names is New York Community. They're 120 billion in assets. This is a company that was a beneficiary of Signature Bank. So they assumed Signature Bank from the FDIC in April. This is a stock that's done very well. But we think there's another chapter to this growth story. So they've got the ability to retain and reattract deposits from these failed institutions in the New York market. And that's a stock that's trading at 1.3 times tangible book. We think they've got scale beyond 100. If you look below that, one of our other favorite names is East West Bank. It's a $70 billion in asset bank. They've got certainly plenty of room before they get to 100. This is a stock that trades at 1.3 times tangible book. This is a company that makes a lot of money. And importantly, the capital rules that are being proposed, they've got plenty of capital to absorb any hit from increased regulation.